You're watching Stock Watch this week. I'm Zinati Guma, and joining me to unpack your stock-related questions today is Devin Shutte from the Robay Group. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, Devin. There is absolutely so much noise. Every day we're hearing something on the Trump tariffs, and amid that, we then have gold clocking another record high. What is your reading of the market right now?
Yes, I mean, I think we've been speaking about this for a while, but uncertainty, whether it's, as you said, in trade and the tariffs, whether it's in the future of interest rates, whether it's in geopolitics, we just don't know. And that's really being reflected in market volatility, but definitely in the yellow metal, hitting another record high today. And yeah, really worries that on the 2nd of April, we're going to get further escalations once we've got clarity on those tariffs. So yeah. Not a great environment for markets at the moment, and really a difficult one to kind of see the immediate way forward.
All right. Well, Devin, let's get into the questions that have come through from our viewers. Starting off with CA Sales that released its results yesterday. Can you suggest or recommend a few shares which are great little businesses which larger institutional investors cannot buy? Let's maybe start off with CA Sales. What did you think of that?
Sure. So I mean, they've really been a good little growth story in South Africa. You know, if you consider their last results, headline earnings per share growing by about 25%. They do have some risks there. You know, they've got exposure to the diamond price through Botswana. Yeah. But I think where they've really been good is they've grown the business with kind of acquisitions that are not too big. And giving them indigestion, they've kind of bolted them on quite nicely. And I think as a result, you've got a company where the market is really starting to recognize the work that management's doing there. So share price is up really nicely. I think it's in the region of 50% of the last 12 months. And so yeah, quite a nice little growth story there. Yeah, I would agree.
Yeah. Any other ones that you are looking at? Maybe I don't know. One that I can think about is capital appreciation, or any ones that are on your radar.
Yeah, potentially capital appreciation. You know, that software business is still doing quite well, and I think they're executing well there. So yeah, definitely one to look at. I'm not going to speak about Renogen. It's just, we just never know what's happening there. There could have been good news recently, but, you know, I think the jury might still be out on that.
Yeah.
Purple Capital one we think is quite intriguing. You know, that easy equity business still continues to grow in that regard. And we think if they bed down the offshore expansion into Indonesia, I think that could be, or the Philippines, I beg your pardon, that could be quite exciting and very earnings accretive, but a lot of execution risk there. So yeah, I mean, there's these little pockets of business. I think also, there's another business called Home Choice, and they've done quite well. But the problem often with these businesses is for your retail investors, the liquidity getting in and out there, and that can sometimes penalize you on your entry and exit price levels.
Yeah. I must tell you, though, I'm not happy with Renogen because I have it in my little easy equities portfolio, and I thought that when they came out with that announcement, I think what they've started selling their liquid helium, and we had this huge surge in the share price. I thought that maybe I'd be in a good position. I was still in the red, so I'm not going to be happy until I get out of that position. And also Home Choice is another one that a lot of people never actually talk about, but we do have the CEO on quite often, and the results are genuinely showing good growth momentum there with their fintech business. Let's get into more questions. Let me look at this one. Karooooo with 5 O's. That's also another one that's actually shown very, very great upward momentum in their earnings for the last few years. Actually, there seems to be no stopping this company at this point. What's your view on it?
Yeah, I mean, I think it's probably one that's slightly overlooked. It's not the smallest company anymore. I mean, it's put in year after year pretty decent growth there. And what you've also got is a dollar listing there. So when you're looking at the revenue numbers, they've been increasing very nicely. In the region of 20% in dollars. So that's really been good. Um, Profit margins have been slightly under pressure. There has been some contraction there.
Yeah.
But we think that they're spending on growth, they're spending on sales, they're spending on marketing. So that's been a lot of it there. But yeah, overall, the share price has done incredibly well. I think that's up north of 80% over the last year. And yeah, one to keep an eye on. You've got a client base with a lot of annuity revenue coming in, which is a lot less risky than kind of big project-based revenue. And so yeah, it's one that's been able to consistently perform.
All right. Well, on the other side of the spectrum, we're looking at Glencore, which has not made a lot of investors happy. Question here, Glencore is at record lows while the copper price is at record highs. Why?
Resource companies, if you can fully describe what they're doing, you're a better investor than me. One thing I will say though is that these kind of diversified miners have fallen out of favor a bit. You've seen people take much more concentrated bets on specific metals, whether it's the PGMs or golds or base metals and the like. Whereas with Glencore, as the listener correctly mentioned, you're getting copper, but you're also getting metals like cobalt, nickel, zinc, and lead. And yeah, my sense is that the portfolio of those metals has probably been dragging down the share price there. So yeah, not always as straightforward, but our sense is still to bet on a single commodity. When it goes your way, you look very clever, but there's always the side of that coin. And yeah, we're quite cautious in that regard.
Yeah, a lot of people were looking very clever when the coal price was at record highs. And of course, we saw those returns coming through to Thungela. But yeah, of course, we have seen the pressure now with the kind of normalized prices and how that's filtered through to Thungela. So really quite interesting, that comparison between the diversified miners and the single commodity miners. I don't know if this is something that you have been following, Devin, and if you actually even look at cannabis companies, I think there were two of them on the JSE, psilocybin and Labat Africa. With the ban on hemp and cannabis lifted today, of course, we had that thing where they said that what we commonly call them in the streets are edibles. There was the health minister banning edibles and basically like cannabis within like consumable products, food products. And then making a change, I think a week or a few days later, saying that they're not banning them anymore. So anyway, there was a 25% jump in the psilocybin share price, and the viewer was asking if it was warranted. Well, I would think so, but I don't know. Do you follow these companies or any of those news?
Zanat, not closely. We have been keeping track of the latest news flow. I think what I will say is with businesses in an industry like this is that you run massive regulatory risk. And how you outlined is exactly that, is that you will have a government minister that can largely dictate the future of what these businesses are able to produce and sell. So to our mind, that creates quite a fragile business. There's also, in terms of the product itself, yes, there is some specialization, but kind of the base plant is, pretty widely available, very easy to farm. And so we don't think there's a massive moat to these businesses. Overlay kind of regulatory fragility, and not a place we're rushing into.
All right. Well, talking about places to rush into, you're not rushing into cannabis, but a lot of people rushing into gold. And quite interestingly, I see that Goldfields is up almost 2.5% as we speak. And I'm wondering, because I don't actually think I've seen Goldfields' share price being under pressure because of the potential the cautionary announcement that they are trading under. Of course, we did get earlier on this week that they've made a deal for Gold Road Resources, and then that they rejected that bid. But then Gold Road said to Goldfields, well, we want your stake in this kind of joint venture mine. And for me, what's interesting is that this is not the first time that Goldfields has been stuck in kind of a stalemate when it comes to a deal, an acquisition deal. And the first time we know that investors were not happy about it. How is your reading of Goldfields' acquisition trail at this moment, and particularly looking at the fact that because of the elevated gold prices, there could potentially be a risk of overpayment?
Yeah, I think we've seen this potentially time and time again with resource companies. You'll remember how tough it is to run a company like this when the entire profitability of your business is really dictated by the price of the underlying resource that you mine. So, you've got gold that's doing incredibly well, massive operational leverage coming through in Goldfields. That means a lot of profitability dropping to the bottom line. And they've got to do something with it. They've got to allocate to it. They can return it to shareholders, or they can potentially try invest internally or externally. So Goldfields has attempted externally with an acquisition. I mean, it's not a tiny acquisition. If memory serves, it's about $2 billion. And so as a result, there is a lot of risk there. As you said, if they get that wrong, will they overpay simply because, the money's burning a hole in their wallet? That's going to hurt shareholders in the long term. So I'm cautious, not Goldfields specifically, but just the trend that starts to paint a picture that, we are probably nearer the top of the cycle when these resource companies are really starting to open their wallets and looking for acquisitions quite aggressively.
Yeah, all right. Well, I wish they were acquiring my wallet. But let's get to your stock pick for today. Devin, what are you choosing?
Yes, I'm going for a classic. Berkshire Hathaway, Warren Buffett. It's one we hold in our global funds. But what's been impressive is that in this first quarter of 2025, he's had his fourth best relative quarter in over 40 years. So that means he's beaten the S&P index this quarter by 20%. And that's just, to my mind, phenomenal. He's made some changes in Berkshire. But what it also, history shows us, is that when Berkshire makes a strong start to the year, it often manages to hold on to the gains. And in addition, Berkshire tends to perform well when US markets are negative or sideways. And I think that's just testament to the strong balance sheet, large cash reserves, and a focus on value. So, we came into the beginning of this year with really elevated US valuations, quite pessimistic forecasts for the year ahead. And if those do play out, I think Berkshire's a really safe place to be.
All right. Well, thank you so much for your time and for your analysis today, Devin. Really appreciate it, and do have a good weekend. Thanks to my guest, Devin Shutte from the Robay Group. Do remember that Stockwatch pre-records on Mondays and Wednesdays at 1 p.m. and is live at 6:30 p.m. on Tuesdays and Thursdays. Well, Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind, and do keep sending your questions through. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right here on Business Day TV.